Hi, everybody. My name is Tanya Ore. I am a CDFA here in San Diego. One of the questions I keep getting through my cases is how do people going through divorce keep their amazing mortgage rates given today's market? So today I have Zach Taylor with me on Cross Country Mortgage. He was going to give me some insight as to the best way to make this happen for people going through divorce. Zach, thanks for being here.
Thanks for having me. I really appreciate the opportunity. Yeah, this is a common question that comes up all the time, right? Because rates are higher right now and people are saying, I want to keep my 2.5% mortgage and how can I do that and negotiate the buyout for the house, right? So let me run through a couple quick things that I see happening out there and that we're able to facilitate. Number one, if you don't need any financing, right? If you're balancing with other assets, then obviously you don't need to refinance. You don't need to do anything except for just have the exiting spouse stay on the mortgage for X period of time so that you have time to remove him or her from the mortgage in your agreement, right? So you can take title in the house and have an agreement that you have X period of months or years or whatever to accomplish this task. There's a couple of ways that you can accomplish the task of getting your spouse off the mortgage. And number one is called a divorce mortgage assumption. Most people don't know about this, so you want to listen closely to my tip here, is that you call your loan servicer, and that contact info is on your mortgage statement. Don't call the loan officer that did the loan. You're going to call the loan servicer who you're making your payments to. Does that make sense, Tanya?
Yes, absolutely.
And they will send you the process to apply for and potentially qualify for removing your spouse from the mortgage without refinancing. So a couple things to remember about that is that you cannot apply until your divorce is final. So you have to have it signed, stamped, in line, and stamped and conformed and done by the court before you can even apply. So that's why you need to have X period of months or years in order to get this accomplished. And then what if you don't qualify, right? Then you need to have time with which to either try to refinance, which might be some different qualifications, some different strategies that we can use, or you're going to need time to get the home listed and sell to get your spouse off the mortgage, right?
Zach, real quick question. Before we even get to the assumption of mortgage, how long do you recommend the spouse or the exiting spouse stay on the mortgage in terms of the MSA? What should I be recommending to people in terms of a timeline?
It's really depending on the comfort level between the couple. Obviously, the one that's staying in the property, it would accommodate both people to make sure that there's enough time in there, whether that be to if she or he is going to stay on the mortgage for X period of time until the kids finish school or whatever that is. It can be that long, or it can just be I want out on the mortgage right away, and so you have 6 months after the marriage is done and I'm divorced in order to get that accomplished, right? So it just depends anywhere in that range. You don't want to just make it so fast that there's no chance at all to get that done. So
okay, so a reasonable time in order to either get them off the mortgage from the paperwork process perspective, and also maybe from the who's going to stay in the home perspective in terms of the children.
Right. But what if the person that is buying out, the exiting spouse, needs financing, right? How are they going to keep their mortgage in place, keep the loan and do this? Well, if your spouse agrees to stay on the mortgage for X period of time and the exiting spouse wants cash and it can't come from splitting up other assets, then you can pursue a home equity line of credit. We have excellent home equity lines of credit. You can call your bank to find out what they can do. But just remember that any kind of qualifying, if you need that support, if you're the one that's getting the support and you need that support to qualify, it has to be seasoned. Did you want to go through the details in that or save that for another call?
Could you define for everybody what seasoned means?
Seasoned means that you need to have the marital settlement agreement saying how much you're going to get and for how long, right? But you also need to prove that you've actually been receiving it, right? It's one thing to say, hey, you're supposed to get it. You need to prove that you've been getting it. For most types of support, it's 6 months. You have to prove that you've been getting it steadily every month into your own individual bank account, not transferred between joint accounts.
I see. So just to kind of recap for today, the first thing to consider is if you do not need to refinance because you have other assets to buy a spouse out, then it's a matter of talking to your spouse and working out in a reasonable amount of time within the MSA to stay on the mortgage,
Right.
correct?
Yep.
And then the next move ideally is to see with your mortgage company if there is an assumable mortgage option.
Right. And then if none of that works, you got to pursue a refinance. And if that doesn't work and you don't qualify, there are a couple options. If you're 55 and over, you want to reach out to me to talk about a reverse mortgage. It's a great option for people that are over 55 in order to buy out their spouse or buy a new home post-divorce without a payment at all. That's another great option.
That's a great option. Well, thank you, Zach, so much. So much to think about. I'm going to come back to you for more mortgage questions because they are popping up everywhere in all of my cases.
Thank you very much. And anybody can reach out to me. Find me on the web, Zach Taylor, ZachTaylorMortgages.com. Reach out with questions. Thanks a lot.
All right. Thank you, Zach.